thank you very much indeed for coming along to my talk. What I want to do is just talk about 4 reasons why you might want to consider an investment in Imperial Innovations. The first is that we can give you unrivaled access to the cream of UK scientific research. In one company you get exposure to high quality research across a range of sectors. Secondly, you back management teams and so do we. We're passionate about the quality of management that we work with. That is a very important part of our business and you should care about too. The third is that we have a proven business model for making money out of scientific research. And I'll give you some real clear case studies to show how we do it. And fourthly, we've got a very established portfolio. Many of the companies that we have in our business have been over 10 years in the making. As well as 4 reasons why you might consider an investment in Imperial Innovations, I'll end on a slide as to why you might consider an investment in Imperial Innovations now. If it's okay, I'll wander around. I'll probably confuse the cameraman at the back there, but I prefer coming out here rather than the lectern. So Imperial Innovations, what we do is we create, build and invest in companies based on academic research. As the name suggests, we started at Imperial College London and we were set up in a unique way with exclusive commercialization rights over all intellectual property coming out of Imperial College, which is the MIT of Europe. In 2011, we broadened that out to work with other universities in Oxford and Cambridge. We don't have pipeline agreements with those institutions. What we have now is a growing track record. We have a very strong balance sheet and we have an excellent team. And we're finding now that those academic teams from those universities are keen to work with us too. And some stats up there about what we've been doing since our IPO in 2006. We now have a market capitalization of £625 million, and we're one of the most strongest funded business in the sector. We have £191 million of capital available for investment into our portfolio as a result of a £150 million placing in June last year, which was supported by the likes of Invesco Perpetual and Woodford Investment Management. So what do I mean when I talk about access to the cream of UK research? You're familiar, no doubt, with Oxford University, Cambridge University, Imperial College, UCL. £1.4 billion worth of research per annum is spent amongst those 4 universities. And we're very privileged to have 4 of the world's top universities right on our doorstep. So actually, why go further afield when you've got that caliber of research nearby? And of course, these are growing institutions. There's a flight to quality in research. Imperial is expanding to Hammersmith. UCL are expanding to the Olympic site. You've got the Francis Crick Institute being developed around King's Cross. And then, of course, you have the GSKs, the AstraZenecas relocating to Cambridge. So it's a very strong scientific cluster, something that rivals Silicon Valley or the Harvard-Boston area. It's a fantastic asset that we have in the UK. And we believe that proximity is important for what we do because when you're working with academic teams to create new businesses and grow them and build teams, it requires a lot of heavy lifting. And being within an hour's drive of those companies is very important to us to work closely with them. So that's why we're concentrating around this so-called Golden Triangle. I said before that we are passionate about management. You know as investors that it requires this holy trinity or combination of market opportunity, technology, but also management. And we go the extra mile to get really high caliber management teams around our businesses. Right from the outset. In the old days, the bad old days of university spin-outs, often management teams were recruited just because they were willing to work for an unfunded business, and their first task was to go out and raise capital. We've turned that on its head by saying we are going to understand these businesses from the inside, commit capital to the good ones, and then go out and do searches, if necessary, international searches, to get the right management into businesses, and their task is to execute on the strategy, not to go out and fundraise. And that means we can get a much higher caliber of management teams into our businesses than might otherwise have been the case. When I talked about our portfolio companies are stacked with industry heavyweights and serial entrepreneurs, please do come and talk to me afterwards. Please do have a look at our portfolio businesses and see the caliber of people we've got in our companies. And there's a really strong trend there, which is often these are proven CEOs that have started out with blue chip careers. Perhaps they worked for GSK or Yahoo or one of these established companies, but have also had success in entrepreneurial businesses. So they are proven at young startup businesses. And we like the combination of both of those, because even if they're growing a fast growth business, ultimately these companies are going to be acquired by the likes of a GSK, and they need to know what kind of quality these businesses are going to be if they're ultimately going to be acquired. Increasingly, we are recycling management. I said we've been doing this now for over 10 years. We have examples now of management teams, CEOs that have built businesses, sold them out, and have come back to start other companies with us. So Garth Rappaport, a guy who set up a company called Respivert, which was funded and sold within 3 years to Johnson & Johnson, came back with us to start up his next business, a company called Pulmicide, also a respiratory drug discovery business. And so we're increasingly seeing our management teams being recycled. Around 50% of the businesses that we create are what I would call technology push. So this is where you have a research team developing a technology, looking for an application. But an important other 50% of our business are entrepreneurs who see an opportunity to create a business and then leverage off the research base to create intellectual property as they go forward. I said we have a proven business model, and this is what I mean. The little dots on the left-hand side represent a large number of opportunities that we see. We screen something like 400 invention disclosures each year from Imperial College alone. And we're very selective on the ones that we take forward. But our first capital is to de-risk those opportunities in a very capital-efficient way. We may just spend £25,000, or it may be £500,000 doing market research, repeating the academic experiment, developing prototypes. Of course, every investor in early-stage technology says you want to fail early, but we do fail cheaply. We will stop funding companies if they don't progress at that stage. But what we're looking for are significant market opportunities. The prize has got to be worth fighting for. So we're looking to, heart disease, allergies, cancer, new materials for lithium-ion batteries. These are, cliched, but billion-dollar market opportunities. We're not doing small instrumentation businesses. These are really substantial markets that we're going for. As companies progress to the right-hand side, we are then scaling up our investment. And we're the opposite to a seed investor. So if you think about a seed investor that takes all of the early risk and then gets diluted as companies progress, yes, we're prepared to take that early stage risk, but then our successful businesses, we increase our investment and build our stake, and such that so that by the time you get to the right-hand side, we're putting real rocket fuel behind a very small number of companies that we think can become substantial businesses. If I'd shown you this slide 12 months ago, you would have just seen two large spheres on the right-hand side, which was Circassia, our allergy therapeutics business, and Nexion, our lithium-ion battery business. Now you've got 4 because we've started putting more and more capital to work in some of our more advanced companies, including Cellmedica, which is an immuno-oncology business, and Varian Medical, which is a stent company, which I can talk more about later. Our business model is about scaling our investment into companies that we know intimately. We are not a late-stage investor. That is also tricky because you're trying to judge businesses based on a PowerPoint presentation. He says giving you a PowerPoint presentation. But, you know, I appreciate it's really difficult judging a company. Our magic formula is that we watch these companies over a period of time and sit on the boards of these businesses. We see firsthand market data, customer feedback, trial results, and then we can scale up with a level of insight and knowledge. Circassia Pharmaceuticals. This is a case study business that we listed around this time last year, March last year. It is developing a vaccine, short-course vaccine, to treat people with allergies. I won't go into the science. Again, you can come and talk to me later about that. I'm here to talk to you about making money. So the bar chart on the right shows how, and it's divided up into A1, 2, B, and C rounds. Sorry, this is sort of venture capital speak, but the A1 round was the equivalent of our seed investment, where we invested £2 million, which at the time of the IPO became worth 5.6 times that. So 6x return on a seed investment. And that's the kind of thing we should be looking to do. But because that was over a relatively long period of time, 6 years, something of that nature, it's an IRR of 26%. Still not bad, but that's our seed investment. Our model is then about living with these companies from the inside and being able to deploy substantially more capital, so £11.75 million in the last round prior to the IPO, which then became worth 30 million, 2.6x, later stage investment, de-risked, IRR of 52%. And when we raised our money last year, it's because we said we have a number of companies in our portfolio that we want to repeat this and again with, making later stage investments into companies that we know well. And if they all deliver 52% IRRs, I'll be delighted. They won't all, but this is how it should work. We have an established portfolio. It takes a long time to create value from scientific research. We've focused our efforts on around 36 companies. If you look at our accounts, you'll see that we've created over 100 companies since formation, but we really focus down on a small number where we think we can create substantial value. And a real differentiator for us is our expertise in therapeutics, so drug discovery, drug development. And it's a really tricky area to invest in, but through us you get exposure to the best UK drug discovery and therapeutics assets coming out of those universities. We don't have an asset allocation policy, and by that I mean we don't set out to have a certain exposure in certain subsectors. We set out to make money, and so we're looking in absolute terms for which are the best opportunities to deploy our capital into. Our portfolio was valued at £252 million at our last reporting date, and last year we brought 4 companies to public markets. Circassia was one of them. Oxford Immunotech, we listed on NASDAQ. Abzena, who are presenting in the room across the road, and Ixico, which is developing imaging technologies for the diagnosis of Alzheimer's. So 4 public company transactions last year. But we're not reliant on IPO markets for the funding of our businesses. Actually, our preference is to keep companies private for longer, and our 5 largest unlisted investments have raised on average over £40 million each. So we are funding substantial businesses privately, and then when we do bring them to market, they'll be significantly de-risked and mature. So why now? As I say, we've been doing this for a number of years, and we've plotted our portfolio based on their average age. And you can see now that Circassia, top right, has been, it's over 10 years since it came out of the labs. And there are a strong flow of opportunities of companies following behind. And we believe there's significant potential for value creation from these companies as they mature, they get acquired, or we bring more to market. But we're a long-term investor. We provide a continuity of funding to these businesses. We're in no rush to sell, and that's one of the beauties of being a balance sheet investor. We can create value over a long period of time and do the right thing by these businesses. Come over to our stand. We've got examples. I deliberately haven't talked a lot of technology with you because I wanted this message to be about how we make money and how you would make money by investing in innovations. But if you want examples from our portfolio, here's just a selection from our software portfolio, but we've got examples from our therapeutics, materials, and medtech companies too. Thank you very much.